Thanks for the intro, Tom, and the kind words. I actually am an accountant, but I don't act like an accountant or want to act like an accountant from a traditional standpoint. But anyways, looking forward to chatting about kind of all things kind of inventory in terms of how it relates to accounting, controls, production, warehousing, and really understanding inventory and how it's you as a company understand it as an asset, and then how you leverage it and report on it accurately going forward. Before I get too deep into Accountfully and what we do and how we do it, I'd love to kind of what Tom said, like let's be very interactive here. I'd love to kind of customize and point the conversation to the folks that are attending here. So I have the meeting chat updated right now. So if you have any questions or comments that roll in, that'd be awesome. In the meantime, I'm going to ask you all one question if you can. Actually, a couple questions if you can kind of put in the chat box. Number one is just kind of give me a high level kind of ballpark size of your business. Are you below a million, above a million, below, 5 million-ish, 10 million-ish, et cetera? Number two is, do you use an inventory management system or not? And then number three, just kind of specific questions or comments you have. I'd love that because then that can really help kind of customizing and tailoring the conversation. So while y'all are doing that, I'm gonna share my screen here. I think I can do it. All right, do y'all see it? You got it, Tom? See it?
Yes, we do.
Yeah. Cool. And then you see, I'm still good from an audio video perspective.
You are fine.
All right, let's get rolling. So, um, managing inventory, we talked about that. So, Accountfully, we're going to do a quick intro. I'll talk about Accountfully and myself. Talk about accounting, just some best practices, ensuring accuracy of accounting, accounting for freight costs, samples, et cetera. And then overall, just kind of high level sales tax implications because they can depend upon where you have inventory. Some production, warehousing, and control kind of conversations kind of thrown throughout the conversation there. So, um, all right. Accountfully, we are been around for a decade, based headquartered here in Charleston, South Carolina. My wife Meredith and myself opened or run the business. I'm the CEO. She's the COO, handle all the kind of sales, marketing, client facing aspect. She handles all the operations, HR, behind the scenes aspects. But we have a fantastic team of over 70 people now. Even though we're headquartered in Charleston, I'd say 60 to 70% of our team are scattered across the U.S. And help a slew of our clients across the U.S. So um, our core service is basically being a fractional accounting department for clients. We segment or we've niched out within the CPG space, which is why we're kind of involved in this. And then as we've grown our business the last decade, we've gotten more and more involved with CPG plus inventory based companies. So we've developed kind of an inventory accounting expertise that it's just not related to inventory accounting from like a balance sheet P&L standpoint, but also integrating like an inventory management system and when it makes sense and supporting and consulting our clients on that. So we offer a full suite of services, like I said, full service outsourced accounting. We even offer like basic scaled back bookkeeping for a brand new company, control level services. If you have a bookkeeper in-house, CFO, finance and advisory, we have an awesome tax team to do taxes, which, we're in the heat of it right now. Deductions management to help review, track, audit, trade spend from specifically unifying KHE and then inventory system consulting, which is kind of where we're doing this. Specifically on that, we're essentially experts, partner experts within Sin 7, specifically their core version, which used to be called Deer Inventory, where we have a team where we implement, support, and consult within that. We've probably in the last 2 to 3 years worked with 80 different kind of companies, most of those within CPG of doing those things there. So as you can see at our core, really accountants, and then have built out these other services to, specific to our clients' needs, as our clients have grown up the chain. So from an accounting perspective, just accounting for inventory while using the correct accounting is crucial, right? So a big part of when uh, we've been very lucky, Accountfully has, where we've actually specialized within inventory-based companies from a pure just business perspective, because inventory-based companies have harder accounting needs than a tech-based company or a service-based company, because that goes right around to inventory and accounting for inventory. When should it be on the balance sheet? When should it be on the P&L from a cost of goods sold perspective? So A lot of brands that come to us may have had an awesome bookkeeper or done it themselves in, from an accounting perspective or bookkeeping perspective, and then they get to a point where they're like, hey, I need to properly account for inventory. I'm not doing it on an accrual basis. I'm doing it on a cash basis. I don't know what my margins are, et cetera. So that's where we come into play here. So as we kind of go through a couple of these things, I'm not going to touch base on every one of them, but as we go through this, again, feel free to add any kind of questions or comments into the comment box. But number one, your inventory at the end of the day is an asset, right? It's not an expense once you buy it. The whole point of it is when you're buying it, you're going to resell it at a higher cost, right? That's what you do as an inventory-based company. The entire kind of goal here for you as business owners for an inventory-based company is to learn how to, get the highest ROI or efficiency from those assets, i.e. inventory that you're buying, right? So number one, I just want everybody to be clear, inventory is your number one resource kind of spend in terms of dollars going out the door, dollars sitting in a warehouse, as well as time and energy just managing inventory, right? So inventory should be your highest kind of should be of your highest priority or top one or two priorities of your business is ensuring that the accurate bookkeeping, accounting, controls and production of inventory. From an inventory kind of accounting perspective, right? On the balance sheet, once you buy it, gets on the balance sheet inventory asset. When you sell it, it moves to the profit and loss statement under cost of goods sold. That's the flow of it, right? From a business perspective, you could have more than one inventory account on the balance sheet, more than one COGS account on the P&L, which we'll get into as we go forward here. Where and how to organize the data. Number one, you should be having your supply chain mapped out, right? And from your supply chain, the entire process of when you buy a product, when you put it together, or a co-packer puts it together, when you send it or store it, when you ship it, and when the customer receives it. So basically, you should have a workflow or a visual of here's my vendors, here's the customers, what does everything go on in between of that aspect. What that's going to help you do is understand the picture and the visual of just who am I dealing with, right? From vendors and customers, from warehouses, from 3PLs, from co-mans. What are the costs of everything that I'm buying that come along the venture? Tolling, freight, duties, et cetera, right? As well as then basically helping you put together your assemblies or bill of materials from where you buy it, where you own it, where it becomes a finished good, and how it gets to customers, as well as what the cost of all those products are along the way. One big aspect of it is as well as where do I house inventory that I own for sake of performing inventory counts or valuations at the end of the month or quarter, right? That means your warehouse, your office, maybe Amazon, et cetera, right? So if you don't have that at this point, I would highly recommend getting a visual in place with all those touch points so then you can kind of better understand your inventory and supply chain from just a touch points and then a cost perspective. And then that's going to help with accounting and bookkeeping, et cetera. When you work with Accountfully, basically, we have this document called the inventory workbook, which is just in Google Sheets that kind of puts everything in one position or one document that then helps us from an accounting financial reporting standpoint. But a lot of folks that work with us is like, oh, this is great. I finally have it in one document. And again, from just a complexity of businesses, from a supply chain perspective, right? A lot of folks in the CPG space don't have a ton of SKUs in relation to a shirt company, right? Or a sunglass company, because those shirt companies come out with new products or new styles every season. They sell one T-shirt with 6 different colors and 5 different sizes, right? There's a ton of variance there. A lot of the clients that we work with that sell 4 or 5 products, or maybe 10 or 15, right, in different things, but it's kind of stable over time. But the complexity comes in relation to, are you doing everything on your own in-house manufacturing where you have all of these things to worry about? Or are you using a co-man, buying some products and raw materials and shipping it in different locations? Or are you literally just buying finished goods and reselling them as like a turnkey co-packer relationship? So there's complexities that come into your supply chain that kind of impact how we're reporting from an accounting bookkeeping perspective. And then, from a accounting perspective, a big part of this whole operation is ensuring that we understand what your margins are across every sales channel. So the whole goal, and I talked to Tom actually last week on um, our podcast called the Month End Podcast, Accountfully podcast. We were talking about, I said, what is the biggest, the two biggest factors from a company from 0 to 1 million annual revenue that they should be focused on, right? And he said, number one, product fit with your customers, and number two, essentially know your costs and unit economics of your product. Um, that's the end all be all, right? A lot, I could probably count like maybe on more than one hand from clients the last 5, 6 years that have come to us that by the time we put all this together in terms of the cost of raw materials, freight, labor, et cetera, warehousing, that literally by the time we add it up, their costs are actually higher than their sales price they're selling because they've never put it together or they did 4 years ago and things have changed. And all of a sudden you're like, I don't even know what the whole point of what you're doing is right here because you're going to lose money clearly right out the gate. So understanding that as a whole from a business perspective, and then clearly as you're going into multiple sales channels, on your website, Amazon, Fair, distribution, understanding the unit economics within each of those sales channels is very important. All right. So some things to consider. Number one, stay consistent with your data so reporting is clean and accurate. Basically what that means is essentially let's get a chart of accounts we use, a process and workflow. So then month over month, we can compare data from a cost, from a revenue, from an overhead perspective, right? That's just kind of basic bookkeeping and accounting. The whole goal of month over month or quarter over quarter reporting is you're able to compare against prior quarters or prior months or same as last year. So then you can have comparative data of your results and how you're doing. How many accounts should you have? This depends on how complex your supply chain is and how detail oriented you want to be. A lot of times, depending upon your business, highly recommend keeping everything as simple as possible versus starting out more complex because you can always add on complexities and things that happen. Sometimes it's hard to go backwards. So number one, how many kind of accounts should you have on your balance sheet? Inventory, asset, should we have raw materials, WIP, finished goods broken out by flavors and things? After you think about that, how hard is it to go ahead and put that in your QuickBooks file, right? You're going to have to have that information like in Excel or Google Sheets to manage it, but do you need that in your QuickBooks file, right? Are you actually going to use that data? Does that mean anything to you? A lot of times people have data in there, but it's like, are you actually leveraging this or using this? Like, no, I don't even check it each month or quarter. I don't even know why it's there. So keep things as simple as possible, especially if you're a smaller business with a kind of a less complex supply chain. The more intricate the details, the more errors and mistakes we'll have. That's not even within inventory COGS, but if your chart of accounts and if you have 15 advertising and marketing subcategories, there's going to be more probability of miscoding in those. So then it's inaccurate data versus having 2 or 3 main ones, right? So keep things as simple as possible. You can always increase as your complexity arises as you grow, as well as you have more resources, i.e. an accounting firm or an in-house person that can help manage it better. Timing of sales versus shipping. Really, at the end of the day, the ship date when it leaves your warehouse or your 3PL or whatever, that's when you actually should recognize revenue on a product, right? Like you could get an order from a customer today, but if you don't ship it till next week is when the actual revenue should occur. That's when it leaves from becoming an asset and you own it to when it becomes revenue. And at the same date, essentially, that's when you should recognize the cost of goods sold. So when you sell a product and the day you ship it, basically the accounting behind the scenes is revenue, accounts receivable if you're doing an invoice or a wholesale invoice. Separately, it is cost of goods sold, increase, reduce inventory. So at that date, then for that sale, each sale you basically have a specific margin on that sale from a cost of goods sold or gross margin perspective. So just understanding that and making sure you have a workflow in terms of how you're managing it. All right, next. And thanks for Steve, Brian, and Jason for putting comments in here using QuickBooks. When you say QuickBooks, Jason, are you saying, and Jason and Brian, when you're using QuickBooks, are you saying QuickBooks Online, correct? And Steve, I don't have a ton of experience with SAP, but the overall concepts here work the same. Good. So Brian said correct. Just kind of quickly on system setup. there's zero, like if you're a $0 to $10 million company, there should be zero thought on your basically your accounting system. It should be QuickBooks Online. Um, it doesn't account for and track from inventory from a quantity tracking perspective within the system, but it integrates. It's very efficient. There's a ton of accountants that can help support it because they're used to the product. Then you have different services or other software as a sale or software as a service applications like Bill.com, Gusto, et cetera, that can integrate and share data within it, right? If and when you want to like get an inventory system in place to track inventory from like an inventory ERP standpoint, that's when you use a system like SynStep or Deer systems that then integrates into QuickBooks Online. But having that cloud-based system and everything, it keeps your systems as efficient as possible. When you get up to that 10 million plus, that's when you, depending again upon the complexity where you're at. I mean, we have QuickBooks Online clients that are 20 to 30 million and they're fine. That's when you start looking at other ERP systems like a SAP Business One or a NetSuite or an Intact, et cetera. But at the baseline, you can use just like QuickBooks Online for a long time. So if you're a small company, don't even think about that. Let's start here. Let's start with the basic. Let's start with these systems where the most amount of people can help support me from an accounting bookkeeping perspective, and overarch you can grow with that. Sales channels and reports. One of the best practices to do is essentially leveraging all these sales channels and essentially segmenting your profit and loss for each sales channel or big customer you have, right? But while you're doing that, specifically within profit and loss, but while you're doing that, you really need to ensure when you're looking at this export data and sales data from Shopify, from Amazon, from Faire, that we're being consistent in terms of what products are being sold. Are the reporting consistent on the actual ship dates? And is that when we're accounting for them? Like, how are we handling them from an overall kind of cost perspective or discounting or sales taxes or kind of all that aspect, right? So make sure there's some consistency there. And then just the more sales channels, the more complexities again, right? A big part of this, again, when I talk to Tom and a lot of folks in here, like, is it better to be wide or deep, right, at the start? So if you're wide, there's a lot more going on. There's a lot more time and energy across the board from an accounting perspective. When I work with a company that's $250,000 annual run rate, so small brand as they're growing, they may be more expensive for what I deal with because they're on Amazon, Faire, Mabel, Shopify, all this stuff going on, versus one company that's $10 million and literally just sells on Shopify and Amazon, right? Just from an accounting bookkeeping perspective, understanding that there's complexities and time that go into it from our perspective, as well as your perspective of managing all that. Again, I don't know the answer right or wrong in terms of what works best for you, but just be aware of that. And then some other cross checks for report. Again, do the dates reconcile? Are the SKUs accurate? Sometimes SKUs get created here versus here and aren't reconciled in the same SKU number in terms of reporting. And then again, co-packer 3PL reports can also have variations of SKU and shipment timing. And clearly, I think everybody knows that co-packer and 3PL reports, sometimes their accounts aren't very accurate or timely or anything. That can clearly impact everything you are. So that's a big part of this conversation as well, of specifically understanding your inventory, what you have on hand, where you have it on hand. That's a big part of controls, right, of your business. Samples and damage, like clearly this is a big part of your business and making sure you have a good understanding of this aspect. So inventory, not all inventory sells, right? You'll have an inventory product that's ready to sell and that you then use it for marketing and advertising, i.e. samples, right? Separately, you'll have one for damage, whether they get broken or whether they're spoiled or whatever it is, but especially within the food and drink space, right? So you need to make sure that you have a good process and understanding of how you're accounting for these items, right? Samples and freebies, they need to be accounted for marketing and advertising expense, right? You need to make sure you have a good process to understand how much stuff you're shipping to this customer or that customer or whatever, because then number one, that's going to help you understand, are those turning into customers, just from a sales perspective, from a good business perspective. But separately, we need to then calculate the cost of all of those in whole and move them from inventory to marketing and advertising. We don't want them to be part of COGS and affect your margins. That's going to basically, like, why is the margin so low? Well, we may have X thousands of dollars that literally we're sampling out or giving away or promoting. Well, we would want those properly segmented into a marketing expense. And then again, just be careful on this with distributor deals and how much free and discounted product you can take for this, right? So We've had a couple of clients that are small, and all of a sudden you get into a bad relationship with Unifier KE in terms of a bad contractual relationship where you're like, sure, we're going nationwide. Let's give 4 free fill packs per every store and across the United States. Well, did you do your math? Because you're not going to get paid at all for a long time, and that could put you out of business. So at our core with samples and freebies, just make sure you have a tracking mechanism in place to do that. Clearly, when you're a lot of our clients kind of have their 3PLs integrated through Shopify. And as long as you have some sort of, discount code or some sort of tag that shows it, then it's easy to pull it out and then get it out of inventory into COGS. And then breakage, spoils, damage. You need to be accounting for that. Clearly, you need to understand breakage, spoils, damage, theft, right? So this is a big part of this remote world that we live in, right? In the past, years ago, a lot of brands had all their inventory in a warehouse that they saw and they could touch and feel every day. Now with basically outsourcing, warehousing, i.e. 3PLs or co-mans or things like that, or Amazon, you don't see that every day. So you need to have some level of controls and oversight over the people that you're working with to ensure that what they're doing to your products are accurate and timely. So when you're looking at things each month, if you're doing inventory manually, like in spreadsheets, right, and all of a sudden you have this much inventory on hand, you sold this much, and at the end of the next month, the 3PL gives you this report that says we have this much, and it doesn't tie, and it's materially off, you need to start asking questions of where is this at? Breakage, spoils, damage, like theft, right? Somebody at that warehouse could be stealing your product and you have no idea, that they have no idea, right? So like that's a big part of this as well. Just think of it, if it was in your office or your warehouse, if somebody came in and took it or broke things, you need to make sure you understand why those are happening. And again, they could have some impact on taxes and also be covered by insurance. Specifically, I'll put a plug out there for my friends at Secure CPG in relation to insurance for basically CPG brands here. They're specializing in that. As a business owner, especially a small one, you have no idea the amount of insurances that you can have and why the risk that exists from product insurance, liability insurance, insurance against your co-man, in transit and freight, insurance when the product's on retail, as well as then just behind the scenes stuff of cyber insurance and things like that. But just be clear from just a control and risk perspective of your business that you need to ensure that you have proper insurance and that they understand your business, specifically in food and drink, because something could happen where a co-man can mess up, and if you don't have proper insurance, it could put you out of business, right? So again, this is kind of mitigating risk, controlling your inventory, and understanding that aspect there. Prepaid inventory. This is one of the, from an inventory kind of accounting perspective, this is two big things that really affect kind of sometimes our inventory counts on a monthly basis with our clients are they didn't let us know that what they paid for this product was actually prepaid and they haven't received it yet, right? You paid 50 grand, but it's still overseas or, it's at the co-man or whatever, as well as separately is, oh, this amount of product wasn't in the account because it was in transit between locations. And so we missed it, right? So understanding and accounting properly for prepaid inventory, before you have it, it shouldn't be in the inventory asset account. And then ensure that you understand when it hits the books in terms of when you own it and when it should be moved to actual inventory as well. Zayed here put a question in that says, how do you recommend brands to deplete raw materials and QBO and the invoice customers? Using the way that's inventory won't be accurate. So I'm not sure if it's your name's Ziyad or Zayed. Sorry if I misspelled that, but we don't track inventory specifically in QBO because it doesn't have a good tracking mechanism within the system itself. What we recommend doing before your pre-inventory management system, i.e. IMS, is essentially not account for raw materials or WIP specifically in QuickBooks, but just kind of include finished goods in there. And then essentially within a spreadsheet, understanding what those raw materials and everything that goes into a product, and then coming together with an average cost of your product, right? So raw materials plus tolling plus this equals my product ready to sell in my warehouse is $5, right? And then basically when you sell it, essentially you create revenues and invoices, everything going on. Then at the end of the month, you calculate what did I sell? And then you multiply that by that $5. And then you have this manual account reconciliation that goes backwards. The reason we do that is because it is much less precise than what you're trying to get at, but separately, when you're doing what you're doing, you're going to spend way too much time and energy just making sure QuickBooks is right versus just running the business and managing it. So keeping things as simple as possible when you're small from like an Excel spreadsheet perspective. Um, Separately, your other question, software. So when you get to that point of wanting like that level of visibility, that's when I'd recommend using like a system like Sin7 Core, used to call it the Air Inventory, cloud-based, great user experience, 300-400 bucks a month, syncs to QuickBooks, Amazon, Shopify sync down. You can have various EDI providers, but that system itself accounts for raw materials. You put builds and assemblies in there. It automatically adds up your landed costs. You can allocate freight, duties, taxes, and then when it's sold, it automatically calculates your cost of goods sold, syncs it to QuickBooks, syncs the revenue, and then it's depleting inventory at that point. That system there is set up for what you're talking about. QuickBooks Online is basically not. It's set up for a general ledger system that is great for once you understand what it's used for. So I wouldn't overcomplicate it, that aspect. And then how would that work when we have to pay our vendors? So basically what happens is you have like a workflow, right? Let's say you're not using Sin7 Core, you're just using QuickBooks Online and is inventory. You go ahead and get a bill for $50,000 from inventory. You put that in your system, let's say QuickBooks Online. It would go to AP, accounts payable, and then you'd increase inventory asset. And then you pay the bill, whether you pay the bill via wire, through your online banking, or whether you use a system like Bill.com that we use that basically syncs up who's to pay it. Once you pay it, it increases inventory, and then the COGS portion gets posted on a sale basis or end of each month once we calculate sales. So their invoice has to go to inventory asset is what it goes to. Great questions. Thank you so much for asking those, Zaid. And that's where, like, let's say you pay back to the scenario with the prepaid inventory, you pay the inventory, or you pay this person 50 grand, let's say again, but you're not, it's a prepayment and it's a deposit or whatever. That shouldn't go to an inventory asset account. You should have a separate account on your balance sheet that's called prepaid inventory. So that again, cool, I'm going to receive 50 grand at some point, but it's not my inventory asset. When you receive it, you basically move it to inventory asset within your financial reporting system. Warehousing and freight costs, excuse me, cost factors to consider. Again, you need to know where your inventory lives and how much you have. A lot of times when we, again, go through inventory process and month-end inventory counts through our, when we onboard clients, sometimes there's just locations that are missed, right? Hey, I got inventory at this 3PL, this co-man, and then Amazon, because in Amazon FBA is a consignment relationship, so you still own the product. And then we start going this off. We're like, oh yeah, it's by the way, we have a ton of inventory that actually is at our office location that we use for local sales. Oh, well, we also need to add that in, right? So you need to understand everywhere you have product, the more warehouses you have, a big aspect with that is accounting for all that, plus additionally, like freight to and from all these warehouses, right? That can add up very, very costly. Sales tax considerations. Just sales tax and even income tax, it comes down to sometimes where you have property, right? Physical property and physical nexus, there's a term called nexus that's here. What that basically means is presence. And from a sales tax perspective, basically your nexus of presence is kind of three things. Do you have physical presence there, payroll, headquarters, inventory? Do you have economic presence, number of transactions in a specific state or over a specific dollar amount? All this varies by state, so it matters by that. But if you do have inventory in various states, you just have to be conscious because that could impact your sales tax and income tax situation. Storage fees, lost inventory accounts, just make sure you're aware of all the fees that exist. And then freight costs, best practices, understanding your shipping costs and how it travels. Two things about freight. We account for freight and shipping in kind of two different buckets. Number one is all your products and all your raw materials, everything. The biggest first point that we want is the biggest kind of stopping point is when a product is in your warehouse ready to sell. In any one of your warehouses ready to sell, right? It could be a 3PL, it could be your office, could be Amazon, could be your co-man if they help with shipping. What are all the fees that go into that? So basically, raw materials, tolling, freight, duties, etc., and then also it comes here. So calculate the landed cost or the average cost of that product with all that, then that's the cost that we're going to use to calculate your cost of goods sold, with which affects your gross profit margins. Then all the costs that go from your warehouse to the customer then impacts contribution margin we deal with, which basically is kind of below the line, but then that's straight out or shipping out to the customers, pick, pack, ship, the Amazon fees that you see a lot of, credit card fees, etc. So understanding the shipping between it can help offset the understanding cost. The reason we segment it is because it just helps brand owners see two different kind of metrics to understanding, wait, my margin's the same, but why am my contribution margin different? Oh, your shipping cost out has increased, or the pick, pack, and fee have really increased highly. So it just kind of helps you kind of segment and look at them at the end of the day, it's all the same, right? In total, you get to that number, but segmenting can kind of help that aspect. But understanding that aspect there, the inventory management, let's say you're bringing in a container of wine from overseas, and you're spending, I don't know, $15,000, let's say, on freight, duty, taxes, the whole 9 yards, and you're bringing in 500 cases of wine, you can easily average that number to that wine. But as you build up more and more product and more purchasing, that's when something like an inventory system, like I mentioned, can really help, because what you can do, you can buy the product and you take that freight bill and duty bill and you apply it, and then the system automatically calculates the cost and increases it. So then over time, when you're selling it, boom, it's accounting for it properly. So thinking of bringing a product over on a container and a ship on the water that's cheaper than literally you flying something over because you have to do a last minute rush order. You can automatically calculate and apply it there. So then you can start segmenting against like batches and purchases, which again helps you run your business over time as you grow and want more complexity. Why be so meticulous? Why all these matter? Understanding all of this is, important. With the whole goal is the biggest thing here, and I don't even think outflows, right? At the end of the day, when you buy inventory, when you have an outflow of inventory, that sucks up your cash, right? You have no cash when you're paying that if it's sitting in your warehouse. So the biggest part of this is when you understand, like, when you can buy a product, what your sell rate is, how you warehouse, how to get things to and from each other, is minimizing that cash cycle of when the money's going out to your vendors and everybody to when the money's coming in from the customer. So understanding the cash cycle of every sales channel is very important, right? Distribution, selling to KE and Unify is a much different sales channel or cash cycle than selling on Amazon or Shopify. Understanding that. Number two, when you know your costs and unit economics, you can constantly reevaluate your supply chain. If freight costs are going up, if some of your raw material products are going up, like are very fluctuation, like nuts, let's say, if they fluctuate highly, then when things get cheaper, should you buy more of them, right? It's just kind of pulling the trigger on that. Understanding with sales channels are underperforming, and then maybe you get out of that sales channel because it's draining your business. Just knowing everything properly, so then you can really help your business from a scalability and growth. And if you know your unit economics and numbers by sales channel and all the stuff we're talking about, when you put a forecast or a model together, you then are able to leverage that data by sales channel to then make better and more accurate assumptions that help you make better decisions for your business going forward. And then again, like, as long as you're properly accounting for inventory as an asset, then there's even debt instruments or things like that can borrow off an inventory asset, right? And an accounts receivable asset, which debt financing and different things like that exist. But when you have accurate bookkeeping and accounting from an inventory cost perspective, it helps out in a lot of matters. Next steps, we talked kind of high level about this a little bit. What to do when it's too much. An inventory system is a good step, but it requires a firm understanding of what we just talked about. It requires a team. That's the biggest miss that's why I typically tell brands, don't even think about an inventory system until you're like $1 million run rate annually, because the amount of time and energy it takes from a resource standpoint can be a lot if you're not understanding how much it takes, right? We have some folks like, this sounds great, let's do it. Okay, great. Do you have somebody to update it or manage it or whatever? Sure, I do. They don't do it, and then they're like, I thought this was set it and forget it. Next thing you know, it's a waste of money and energy and time when you didn't really need it in the first place because you weren't going to leverage and use it. So just understanding when you need it, why the complexities exist, and then make sure you have a good team to implement it. It requires active management, data input. Somebody needs to be in there every day. And again, it's a good next step if your product is high your in-house manufacturing, need more automation. Again, some of these systems and automate POs and reordering and all the stuff that you're looking at, right? You can look into safety stocks and lead time and reorder quantities and the whole thing. So you can really, dive it in terms of where you're at as well. And then just some closing thoughts. Again, inventory is an asset, lifeblood of your business. The whole goal should be being as efficient as possible on your inventory. Which basically is like, how do I get the most ROI on it? From minimization of cash outflow from the cash cycle, the highest margin on that product, and how can I get something in and sell it, as quickly as possible at the highest price. Establish accurate and consistent reporting. Maintain a central document with all of your supply chain data. Record the revenue at the time of shipment, making sure you're pulling accurate data and consistent data across sales channels and warehouses. Just make sure you're compliant with any sales tax laws. And then an IMS is a good next step if you want more automation reporting, but just be prepared. When you're doing all this, the initial kind of topics around this conversation, inventory management, we have like accounting, controls, warehousing, freight, all that type of stuff. Well, all this stuff is interrelated for a small business. I'm not going to get into how a 3PL operates, of pick, packing, and shipping, but how it all operates, it's all focused on understanding your supply chain, systematizing it, creating workflows that can help you understand and manage it all. And that's it. Thanks to Tom at Brandjectory for this. That's my email, Brad at Accountfully. You can find us at accountfully.com. We do a lot of we can help out with anything or have a conversation. We also do a lot of information content around CPG, around deductions, inventory, taxes, etc. Hey Billy, Secure CPG, Secure CPG.com. Good to see you again. Thanks, Max.
Hey Brad, I got a couple of questions for you. We'll open up to the field. I did put all the companies you mentioned. I did put their websites in the chat here, but I have a couple of questions. And of course, anybody, if you have a question, please please reach out and ask here. Z had asked part of my question about accounting for raw materials, but I was wondering too, when it comes to raw materials, do all the same warehousing and freight considerations apply? Because some people will store it at their facility, they'll store it in a warehouse facility, it'll be called up by the co-packer at the proper time, it may be stored at the co-packer. Does all those same considerations apply to the warehousing and freight of the raw material?
Yeah. I mean, that's where kind of mapping out all of that kind of comes into play from a supply chain, because the whole goal here is we understand your cost outflows of these raw materials, where those raw materials reside. And then if this raw material goes to this person, what's the cost to get it from here to here? Once it's here, what's the cost to get it to this phase, right? So mapping it out. And if you have a complex supply chain where you work with two co-mans, or maybe you send raw materials to different locations, you should map out each one of them, because they may have different cost structures. At the end of the day, they may create the same product. So if they have different cost structures, then you may need to average that cost structure to manually calculate cost of goods sold. If that's getting complex, what you're talking about, at that point, that's where maybe an inventory system makes sense, because they'll calculate that kind of automatically for you, assuming you're properly entering the data in it.
That's great. And then another question I had about that I wanted to ask about was accounting for actual physical items when there's like chargebacks of 15% of sales and general losses, for warehousing. How do you translate that back, or what's the proper way to translate that back into cases lost, pieces lost, etc., so that you can actually match on a per item basis and know you've accounted for everything?
That's where it can, again, if you want to look at it on a per item basis or a per PO basis, it's going to have a system that helps you drive it back. When something leaves your warehouse, it should be cost of goods sold, right? Then when all of a sudden you sell $20,000 UNFI, $20,000 of revenue, $8,000 of COGS, it left your warehouse. If you get chargebacks and things for $4,000, then you really don't need to worry about that in relation to putting it back in the inventory system, because you're not getting the inventory back. You need to account for that as a contra revenue. So it's really what 16K is the net revenue on it. So the margins hurt. So that type of stuff of how to backfill it in, it's really hard from a system perspective. That just needs to go into, all right, I understand what my unit economics are from a cost perspective for Unifier KE, right? Then if you understand that and say, hey, it's $5 a case, then basically you need to say, well, I'm going to sell this for 20 grand, but I know I'm only going to get 16. So then you just need to back out that aspect to then say into your calculation. It wouldn't be on a per item or PO basis, but it'd be in general as you kind of go in that direction.
Okay. We have a question from Brian at Living Maca. How should we account for damaged and destroyed materials and final product during co-packing?
Um, that is basically you put anything that's like destroyed, or typically what we do is we start out from a simplistic standpoint from your chart of accounts into QuickBooks in your COG section, just as like inventory adjustment, right? Having one account that you're adjusting inventory, which is basically what this is doing. You can have sub accounts as you get more complex of damaged or theft or things like that that come up. But basically, if you're able to say, hey, I know that we lost $5,000 of our inventory during this, you basically do a journal entry in QuickBooks. If you're just using QuickBooks, reducing inventory asset, increasing inventory adjustment into COGS. So it does go into COGS, which affects your margins. But that's kind of how you do it from an accounting perspective. If you had an inventory system in place and you have all these raw materials, then essentially, again, within those systems, they have an inventory adjustment or a stock take adjustment type function that then you put them in, you go boom, 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 you say damage that co-packer, go to this chart of account, it reduces the inventory and syncs it over from that chart of account. And hopefully the damage destroyed and final, are minimal. And if they keep getting bigger, then I have a conversation with the co-managers. Any other questions?
Brad, any final words you want to leave everyone with?
I would say that if you're able to understand the ROI unit economics of your inventory, how those directly impact your sales channels, and then to kind of what we said initially when I chat with, understanding your product fit and your metrics from, velocity, from cost square customer, lifetime value, average order value. If you have all that down, growing your business in the most efficient, profitable, cash minimization outflows perspective is much easier than if you have no idea. If you have no idea, or if you can't tie those, you literally have no chance at growing a business. You need to understand all those metrics and how they impact it, and take the time to understand it. Then literally it's easier for you to run your business, project your business, forecast your business. And then if and when you need to go to a working capital provider, a bank to get a loan, or investor, if you explain the story and what it looks, and hey, if I get $250,000 of working capital, I'm going to end up here. This is how I'm getting there. And you visualize and write it out on paper and on a presentation deck. That's going to be a much quicker win or better win in those relationships than people being like, no, I'm not going to give you any money or loan you any money. So understanding all of this, unit economics, sales channel profitability economics, and then the average, the metrics on the sales side, sales and marketing side, advertising side, chargeback, trade spend, couponing, all that type of stuff.
Excellent, excellent. One last call for questions, for we still have a little bit of time here. So if there's any last questions for Brad, and again, you can reach Brad on the screen there, Brad at accountfully.com.
Yeah, and while we're waiting, see if there's no last questions, Accountfully.com, follow us on Instagram, LinkedIn, etc. We have a lot of content that goes out. I have a podcast, the Month End Podcast, that's targeted toward CPG folks. Tom will be a guest that'll be being pushed out soon in the near term. Yeah, it's great. But anyways, we specialize in CPG brands, but also we have other inventory-based companies, as well as we deal with service-based, tech-based. But at our core, we're niched out in the CPG space. It's still weird looking at February 29th here on this page.
And to something Brad mentioned, next month, our webinar at Brandjectory will be with a 3PL provider. It's actually with someone who didn't like the way they operated with 3PLs. And so they structured their own 3PL to try to take care of some of the problems that they saw in how 3PLs operate. So I think that'll be very insightful and a great follow up to what Brad had to chat about here today. So one last call for questions. If not, we'll let you all get back to your day. I want to thank you all for being here. I'm Tom at brandjectory.com. Very simple. And you can reach us and find out more and see all our upcoming events at www.brandjectorynow.com. So with that, Brad, thank you for being here. We really appreciate it. I'm grateful you had me on your podcast last week. And I look forward to continuing the conversation with you. And if anybody wants to reach out to Brad and loses his email, just reach out to me, and we will get you in touch with Brad.
All right. Thanks, Tom. I really appreciate it. Everybody have a good
Thank you
day.
so much. Appreciate you being here. Thanks, everyone. Take care and have a great rest of the week.
Bye bye.